Good morning once again. Why we do this thing is so that people who are missing out from here can also watch the same thing on YouTube. So first things, I'm going to open it up and generally ask you, what's the feeling? What's the feeling that you all get? Is there something that related to the stock market, related to investments, something that is at the top of your mind? Is there something that you want to put on the table right before we sort of start the conversation for today? I've set the context. We are going to talk about what's going to happen in the next 3 to 6 months to next 1 year. And of course, going forward, we know everything is always going to work out quite beautifully. But right now, immediately, what do we expect in the next, 3 to 12 months? We're going to talk about that first. But something that you have in mind, please unmute yourself, put it on the table.
Yeah, so is there a bubble kind of a scene? I mean, are the economic numbers, like in the last 2 months, the stock market has increased. So is it justified or backed by industry numbers across sectors? Because you're seeing your commodity prices are skyrocketing, and down the line people are feeling the heat. So the money is going to go towards your more essential commodities rather than for investment. So is there a
Correct.
bubble? Yeah, that's my.
Okay. Is there a bubble? I've made a note of that. Okay. Any other, top of the mind query on what's going on?
I think there is a lot of confusion around in the market. Looking at where US is heading, US is heading for tougher times. That is what has been reported, and they are allocating a lot of money. They're taking a lot of debt, and this is what had happened in the past to fund their growth and expenses. At the same time, India is doing well. So,
Absolutely.
but when you look at the situation, if US sneezes, the world over, the markets crash, and that is what has been happening. Just one downgrade by an agency, and the markets plummeted in India when there was actually no reason for the domestic market to actually react in the way it did.
Correct.
So there's a lot of confusion around, and so people actually don't know what to do, because one fine day the market is up, that second day it is down, and we actually don't know what is the reason for it.
Correct, Manoj bhai. I understand exactly what you're saying. I exactly agree with you. What's happening? Okay, so what I'm thinking is I'm going to share a few things with you. Okay, I've got your questions. Yes, Dhirendra, you want to say something? Please go ahead. Please go ahead. I know you're driving, but yeah.
Yeah, so I more than a question or query, what I feel is, am I audible?
Yes, yes, absolutely, all good.
Yeah, so good morning, everyone. And Kartik, I have this feeling, a gut feeling that the market gonna go up only because, yes, we are quite dependent on US, Europe market, what all is happening there. However, if we study back in the last 6 months, a lot of focus and attention is coming to India, and a lot of people, lot of investors are looking towards India. So I really feel that the market will still go up for at least 3 4 months, and after that it might go down for a while, but in a long run it will go up only because this is just a beginning, because we have not seen this in past. That's why it seems like 66K 60, when 50 was not good, going there, then the people were worried. When pandemic started, it went back to 25 24. So for sure it is going to go up, then it will sustain, then it will go down as well. That's what my gut feeling is. And we have just started it. We might looking at the historical numbers that it is really on high, but I don't see it as a high. It is just a beginning. So it will go up, it will go down as well. And that's what my gut feeling is. Yeah, just wanted to contribute that as well.
No, wonderful. Thank you for putting that on the table. So, yeah, there is lots of things happening. And like I said, I have noted your points also. I'm going to share something very interesting that I found. Okay. And, you also might find this thing really, really encouraging. I'm going to just show you some pictures. Okay. To start with, this is a Gravitas show, which is a video. So if anyone of you is interested, I'll send you the video link also. But I'm going to just one by one share these pictures with you. Just sort of have a look. Okay, I was amazed. Malab, I can see millions and billions of dollars of money in these pictures. How, I will just explain you that in just a little while. Okay, but just read the captions. What does it say? BMW makes record sales in India, and this is just a few days back. Malab, it's not very old. It's not a dated video. It's just very, very recent. DLF breaks all sorts of records. Now, apparently, what DLF has done in Delhi is they launched some 4 towers of 4 bedrooms And everything. Yeah, there's the thing. The apartments were almost 7 crores each, and they just sold it in a few hours. Now think about it. The first one was automobiles. The second one was real estate. The third picture that you're seeing here, the third theme that you're seeing is hotels. Now, these are very large industries. Okay. And think about the number of people employed in these industries. Hotel prices are soaring. Look at the rates. Noida, Gujarat, 5x. Apparently, this is also being triggered by that India-Pakistan cricket match, which is going to happen shortly. Look at this. This is airlines. 174 new weekly international flights, not even domestic. And of course, we've heard about news. I couldn't find a caption of the 300 planes and 500 planes. We know Air India has called for hundreds of planes. Okay, these are some new destinations. Look at this news. VFS Global runs out of visa slots in India. This is unbelievable. There's so many people who want to travel. Visa slots khatam ho gaya. Crazy. Some insane appetite for luxury. Then, events like cricket is changing the dynamics. Mindset is changing things that, you only live one. I think this is something that as COVID, basically, that period where we were, holed up inside our houses, they taught us. That period taught us that, maybe you only live once. So maybe this is not only revenge spending that we spoke of in the past, but सवाल ये है कि इतना पैसा आ कहां से रहा है? I mean, who is spending so much money? And it looks like literally everybody is just out to spend money. Maybe we are also contributing to that in some fashion. But yeah, I mean, I think this is something that I'm increasingly hearing, not only with the younger generation, but also with the 50 people in the 50s and 60s, that you only live once. So, मतलब इतने साल जितना भी expenditure नहीं किया वो सारा एक साथ में कर रहे हैं. So, and it is going on and on continuously. This we spoke of. Of course, there are mathematics to say that India's per capita is also sort of increasing. We are becoming a great nation. Name it, hotels, restaurants. I mean, everything's making money. So, the need to upgrade the lifestyle is becomes so large that it's a reality. We are seeing it. Those DLF apartments that got sold, Bombay maybe apartments get sold, Bangalore, Hyderabad, Calcutta, my friends and clients, everyone tell me the trend is the same. Everyone's upgrading their lifestyle. Everyone's trying to get a better standard of living. And everything related to whatever is possible in terms of spending is happening. Well, spending is happening in some sort of a crazy, insane manner. जो अभी तक इतने सालों में नहीं हुआ था, everything's happening right now. So, which obviously means that going forward, the trend is not something which is going to go away very soon. It's going to be there. It's going to continue remaining the same way for an extended period of time. Now, what I see in all these pictures, like I said, I went crazy. Automobiles, look at the number of people it employs. Look at the number of ancillary industries it affects. Hundreds of them, not a few hundred, but maybe thousands of them. Real estate, steel, cement, furnishings, ceramics, name it. And where does all this money go? So many people who are involved and employed in these companies are in turn earning a salary, earning an income. After they earn the income, they also sort of spend that money. It's going up. Yesterday's news, I think I saw somewhere, Indigo is going to, because they've had the best quarter ever, they're going to increase pilot salaries. Now, pilot salaries are, very, very huge. They're very handsome. They're very solid because of course, the amount of risk that is involved in their occupation. But these salaries are set to again rise. So naturally, pilots are the first people who are the ones to buy the Mercedes and to buy the BMWs and the luxury cars and luxury vehicles, because their skills get them a lot of money, but their expenditure is like most of us. So expenditure is not disproportionate, or expenditure is not like the income that they are earning. So I have a lot of pilot friends also, and I exactly know what I'm speaking of. But these are the first things. I mean, there are new, just say doctor ka beta doctor hota hai, pilot ka beta bhi pilot hota hai. So the younger pilots are the guys who are in their mid-20s, and the moment they get their first commercial assignment, their first job, essentially, I know they go out and pick up a Mercedes and they go and pick up an Audi. So that happens all across. And I've seen that like with first-hand experience. So it's absolutely crazy. But now I'm going to show you something else. There are two reasons why this trend is going to continue, and something that Dhirendra, that you said a while ago, this is going to continue. So there is something very interesting here which I want to show you in terms of expensiveness, cheapness. I'll answer that also first because that is a very quick answer. Okay, this what you see, friends, is the P chart, and this is the market. This is the historical of the last 20 years. I keep showing this chart a lot of times. Okay, the black line here is the index. The red line here is what we call as the cheapness or expensiveness of the market. कि market महंगा है कि सस्ता है. So obviously अगर ये you can see the red, this is a zone where it was like really outside, I mean it was way beyond, but most of the times it has been under this zone. I mean at this as the lower level. Let me sort of annotate so that you can see it better. See, broadly speaking, okay, so broadly speaking, the market, the red lines, see, this is where the red bands are, right? I'm just drawing my bands along the red. So this is where it normally is. So it's kind of far from the higher levels right now. So we are not so cheap, but it's not really at the bottom also. So we are not so cheap that you can bet your house on it and you can invest in the market. But we are still, there is a lot of space for it to move out. And the market is here. Market upar hai, but it is still not so expensive. This chart is very clearly showing that. It's very simple. For example, year 2008 ka peak tha, the market was as expensive as this. Was the highest in terms of expensiveness levels here. So naturally it had to fall. Now let us say at this point in time, and this was the COVID fall, and again the markets were running at a very expensive level, because this is the higher or the upper band of this cheapness or expensiveness ratio, which we call as the P ratio. Okay, so this is something that will immediately sort of put to rest that we are not so expensive right now. Okay, so where are we? Well, what do we do, and how are we going to look at something different? Now, again, I'm going to show you one other very interesting sort of a chart that I made for you all. See, this is the Sensex. Okay, this is the Sensex for so many years. So we are right now in terms of the Sensex, as we all know, we are somewhere here where you see my cursor, right? We are somewhere here, as you can see. We are somewhere around this 66 odd thousand levels, correct? Now, what is happening is, this was the COVID bottom. See, this is not technical. This is just a picture. Okay, this is a pictorial representation of where we think we should go. That is the first thing which I'm going to show you. But there is a lot of material and meat in this picture also. Okay, so we were here. This is the COVID bottom, so to say. और उसके बाद में, as you all know, एक बहुत अच्छा rally हो गया, right? Then the period was flat for some time, and now we are again in a trajectory to move up. So what normally happens is that we expect that this much of a move that happened, अगर इतना भी ना हो, इसका आधा भी move हो जाए, तो भी we are looking at this point. This little flag that you see is about 75,000. This is just purely based on inertia, or what we learned in 7th standard or 8th standard school physics. This is just inertia. If I do actually some technical analysis, then I think by about November, maybe a number of 90,000 also might be shown up on the charts. But in the meanwhile, I can pretty clearly see that there is this thing, and this is like surprising. This is actually might even happen by the end of this year. Might even happen faster than that. We are in July. We have got just about 6 months, and I'm saying that 75,000 might happen like as fast as quick as this. So which is quite amazing, right? So having said that, it kind of baffles me when a lot of times we start thinking in terms of the trend that I showed you. So where we were going to move to 75. Just go back, please, 1 second. Okay. Now this is just a frozen picture of the same thing. So you just move ahead, where this can happen as much as by the end of this year, like I said. Okay. Now we just move ahead. So this was based on trend, and now this is flat periods. Now this is something very interesting. A lot of times, a lot of frustration sets in because of what we call as a flat period. Flat period is a period of no activity. It's a period of complete inaction. And I'm only trying to show you what has happened after the flat period. So for example, this was a flat period which happened in the very early 90s. So this was a flat period. If you can see, I mean, because this chart is, over multi-years, over almost 30 years, it's, if you can see very clearly, is there a way to zoom this thing? Can you zoom this? Is it possible to zoom? Yeah, okay, great. So this is where it was at the beginning of the year. This is where it was, towards the end of this period. So it just went down, came back up. So which means this was almost a period of, from 90 till about 91 and a half or almost 92. So about 15, 18 months. A lot of you have heard me saying 15, 18 months is typically a flat period time. Dhaval bhai, you are here also, you will also sort of agree 15, 20 months is like a normal flat period. It happens lots of times, right?
Yes.
In stock market. I know. So this is another flat period, as you can see. This is a period where, again, market was here, went down, upar aaya, niche gaya. This is all happening within a 20% zone. That's why you see in this red rectangles. Okay. There's nothing much happening. But what happened after this flat period is we had a massive 241% rally. What happened here? Uske baad mein we had a massive 121% rally again. This was the technology boom, if you remember, of the 2000s. Okay. Then here's another very crazy sort of a flat period. This happened somewhere around 2011 and lasted almost little more than 2013. Again, 24 months plus or so. But as you can see, it went down, and after going down, it came back up. Nothing really happened here in this much period. But after this period got over, we had a beautiful 62%, 63% sort of a rally, from this period of 2013 to the top of 2015. So I'm just trying to show that in our history, we have a lot of answers at a lot of times. Just that a lot of times we don't look at the history. Now, the most recent example, this example here currently. Okay, so in this example, as you can see, we have again a flattish kind of a period, which is started from October 21 and which was there until as much as, almost this was June 22, and this period is somewhere around the January of this 2023. And then we kind of went down again. But since March, April, we've kind of taken off. So what that basically means is that if this flat period happened, what is the next expectation of the rally? The rally could take us significantly higher. So what I have done here, on one side, I showed you some real core facts of what is happening in India. I don't want to bombard you with GDP data and this and that. Like I said, this time it's only going to be pictures and lots of pictures. So there's a lot of stuff happening on one side. There is expenditure happening, and expenditure happening across cities, across pockets. And there is no better fundamental news than that. This is what is happening in India. We are spending. India is on a spending spree because India is also on a earning spree. Per capita, हमारा जो average income है, everybody's average income has gone up. Because our incomes have gone up, we are spending more. And we're spending like crazy as a country. So that spending is adding to the profits of these companies. So to answer your question, are companies actually making the profit? Yes, they are making insane profits. Today morning's news, SBI has reported the highest ever quarterly growth, 16,000, almost 17,000 crores of quarterly profit. इसका मतलब क्या होता है? Very simple. How does SBI earn money? They are earning money because of the income that they are earning as a result of interest and fees. But fees are a smaller proportion, maybe say 10-20%. I have not studied the balance sheet, but I'm just giving you a very generalistic sort of a view. That 10-20% will be, maybe 30% will be fees income, but the large majority, 70-80% of their income should be nothing but interest income. And because it is interest income that they are earning, that interest income has been the highest. But interest kahan se aayega? If people don't borrow, interest zyada nahi badega. Interest rates have also gone up. Okay, let's also consider that the housing loan rates and other interest rates have also gone up. But that's an incremental revenue. But to have a much larger, highest ever record-breaking quarter, naturally so many people have taken loans, right? Loans are available now today. If I open my ICICI, they say in 3 seconds, take a pre-approved loan of 5 lakhs. So I mean, even if I by mistake press the button, the money will come into my account. Loan has become so easy sometimes to take. Did you find that FIDI activity? If you have, then can you please put it up on the screen? Yes. Yeah. Let's just put that on the screen, and then you can come back to the presentation. Friends, this is always like an interactive thing. Whenever you want to speak, if there is something related to the subject, you can please stop me and we can have, this is more like a workshop versus a monologue. Okay, great. Now what you're showing me is cash. Okay. Okay. What I'm trying to show here friends, is the cash flows that are happening. Can you show me? This is month wise, right? Okay, I want to see annually. Can you show me annually numbers first? What I was trying to show here is, see, this is what activity is happening. In the whole month of July, FII has bought 14,000, domestic just about sold about 1,100. Okay. So for the last few months, FIIs have been continuous buyers on our Indian market. Okay. But the domestic market hasn't really sold too much. 3,300 versus 27,000. I mean, in the previous months, if you see domestic, every month we've been buying 33, 19. Even when the FII sold 41,000, we bought 33,000. So the net impact in the market is nothing negative. But the retail guy is so powerful. Domestic institutions have become so powerful. And in that annual thing, if you can show us the annual numbers, can you scroll down? Will you get annual numbers here? No, you will not get annual numbers. Is it? Okay, fair enough. We'll just stay here. Okay, stay here, stay here. Okay, stay here. Okay, scroll up a little bit. Bus. Okay, I just want to now very gently, very slowly go through it. You see the number of greens that domestic are doing, and the reds happen because something happens in the market and people want to take out money and all that, but that is small. But look at the number of greens, and look at the large, look at the quantum of the green, 46,000, 10,000, and the reds are the exits that the domestic institutions are doing, 7,000, 6,000. It's not great. Look at the exits that the FIIs are doing, minus 58,000, 6,000, minus 18,000. So see, FII is coming inside the country and taking away also a lot of money outside the country. But look at the net result. FII is selling 14,000 and we bought 24,000. When the FII sold 58,000, we bought 46,000. So the domestic institutions, which is nothing but all of us put together collectively, when we invest in mutual funds, when we invest in insurance policies, all this money is also a collective money, plus what we invest individually. All this together becomes domestic investments, is nothing but all of us put together. So Indian market is being bought out by so much of domestic fund power that FI is not being able to make that kind of an impact that they used to do so many years ago. Which means, can they sway your markets? Not really, Manoj bhai. So whatever happens in America, whatever happens anywhere else in the world, they're not able to sway the Indian market so much. Let's go further down. Let's sort of scroll a little bit further down. Okay, stop here. Look at this. July 21 to January. Pretty much FIIs have been on the red. They have only been selling. But look at us. Look at the domestic market. Every single month we have been green. We have bought. And we have bought pretty much equalizing 35, 31, 39, 30. Here there was a 20 to 5 and domestic only bought 4,000. So obviously the market, started falling from October 21. This is the reason why the market fell here, because the domestic did not buy enough in this. But subsequent months it made up in terms of buying. This is what has been happening in the Indian markets. If you see, continuously we are buying and we don't worry so much about the foreign institutions. Go down further. Okay. Now, there are times where we have also been sellers, and this was largely during the COVID period. This is all the COVID times. And FIS was the smart money which was buying at this point of time. So that's why we had a very fast recovery. So the story goes on and on, but essence of it is, stop this and come to our presentation. The essence of this entire conversation is that we are in a situation where our markets are being controlled by us as much as the FII, if not any lesser. That is the sum total of it. Okay, so now let's move on to another subject. Okay, now this subject is, okay, we've understood that market to acha hai, market is going to do well, 75 will also happen, maybe 90,000 will also happen, right? But now, which is the best sector? How do we identify? Where do we invest the money? Which is the best sector? Now, this is something very interesting. I think I want to drive in a very different way. See, we are only used to looking at Sensex as a number. Sensex 66,000, which is why I took Sensex. We've actually stopped looking at Sensex. We've started looking at Nifty because it's got 50 stocks, slightly more broad-based index. But as common men, as common people, we only look at Sensex. But there is so much more. There are some very important indices today. So along with the Nifty, there is a bank Nifty, there is a finance Nifty, there is a FMCG index, there is realty index, there is pharma index, there is IT index. There are lots of, there's at least about, 2 dozen indices. And then there are themes. So totally the number of indices I'm told could be more than about 100. We've not done a study, but someday we will talk about that also. Now, that is exactly the reason why you may see, market upar ja raha hai, my portfolio is not going up. Or sometimes my portfolio just, market went up, but my portfolio went down. So why is all the disparity happening? We are in a very different and we are in a very matured market scenario. So there is something that I want to, again, bring to your notice here. Very interesting. Okay. And it's something that you may not have seen this data before. This is our compilation. So these are some interesting indices. Okay. If you can't see, if somebody needs me to zoom, please let me know. Okay. But otherwise, this is just my little spreadsheet that I'm showing you. Okay. See, what is happening here is I spoke about Nifty, Bank Nifty, etc. Just follow through with me. I will spend about 2 minutes on this. But it's a very powerful piece of information here. Now, these are, like I said, auto index hai, realty index hai, pharma index, IT index. These are different indices. Now it becomes very important. Market is good, everything looks good, India is growing, but where will the maximum money get created in the next maybe 3 months, 6 months, 12 months, 1 year? So very recently I was doing this thing. So now this is what it is. Okay. So now if you see in 2013, okay, 13 is where here, 13 is here. Okay. So what was a sector that did really well? 58%. IT did the best in this particular year. Okay. And what did the index do in this particular year? Only 7%. So if you're only watching at Sensex, then your portfolio must have grown about 7%. But if you had in IT in your portfolio, that IT pocket would have grown 58%. Okay. In the same way, in 2014, PSU banks did 67%. Then all these years, PSU banks didn't do anything. Now suddenly in 22, it did 71%. Okay. Realty. Now look at realty. Realty, that's real estate and all construction and all of that. 2010, everywhere, negative 26, negative 52, 34. Suddenly 2017, they came and gave us 110% return. Okay, everything was also good. Market was also good, right? The whole 2017, you can see everything is plus, plus, plus. Sari jagah pe plus hai. But look at the return. This was this hands down winner. Pharma was a hands down loser in this particular year. Point I'm trying to make is, it depends as to what's happening. 2020 May, as we all know, Nifty hardly did anything. This is calendar year, by the way, January to December. And pharma did 61%, IT did 55%. Look at the kind of growth that we had in all these things. Now, is there a way to find out? Yes, there is a way to find out. I mean, of course, that requires a little bit of professional input. That is not something that you can do it yourself. Of course, you can talk to us. And I mean, this is a little bit of a grid that we kind of maintain, in terms of every sector, what is happening and what is the projection and how it turns out. Sometimes the projections work out, sometimes they don't. As you can see, nobody is a magician. 50% of time doesn't work out. So, all these yellows basically means that what was initially thought at the beginning of the year didn't really happen like that, but then corrective action had to be taken during the year. I just want to take a little check. So far, is it clear? Is it comfortable before we move forward? Is it making sense? Is it been of some value to you so far?
Yeah.
Yes.
Okay, thank you, everyone. Okay, again. So we spoke about sectors, and I showed you how we can even estimate sectors and see how sectors are doing, right? Go on, please. So the summary of this thing is there are different winners at different times, naturally, right? Every year, there is a different winner. Now, you may have noticed that in mutual funds, we tend to do this little activity. See, we don't generally do any sort of churning or any sort of trading with mutual funds, not really advised. But as you can see, there is a sector focus. So large cap, mid cap, small cap, keep that all as it is, more or less. But there are sectors, we can move the sectors. Sometimes we can be in pharma, sometimes you can move from pharma into technology, sometimes from technology into auto. And we have a lot of these sector funds. So in all your portfolios, you will see that there are these sector funds, and we reserve almost 30-40% of money for these sectors. Now, Again, we don't need to change this all the time and very often, but this is something that we've observed, that every 2-3 years there's a little bit of a sector leadership or a rotational change, and that is something that is a good idea to do, and that's what we come to you with suggestions. Okay, please move forward. So what should be the best allocation now? So now you've seen, now what does STSE stand for? This stands for short term and sector equity. Okay, short term and sector equity. Just made a little abbreviation here, nothing extraordinary. But now we may want to think about that, let's sort of first, out of the 100%, mostly because most of the people have money here 100%. If I show you some crazy examples, which I will show you in just a little while, I'll give you some names. We may not have invested in those names, right? But for example, long-term equity, we have 100% money here. Can we move a little bit of money here? Okay, maybe 40% of the money. Okay, then thoda confidence zyada aega, to maybe 60% of the equity portion will be direct equity portion. So it's overall basis. I'm not saying 60%. It is a part of the equity percentage, which is what we are talking about. So we're not talking about overall net worth ka 40-60% here. Okay, but that makes it very, very risky, very volatile, and becomes a little crazy. So the idea is, why not move some money here, because there is growth happening and there is a method of identifying sectors, and then come back here when the profit happens. So over a period of time, both these strategies or both these ideas may be considered, because it's a slightly aggressive idea, but it's only 40% of the equity money. So dekha jaye to, out of my 100 rupees, if I have 70 rupees in equity, and 70 rupees equity may say 30 or 40%, if I come into this short term and sector, then 7 threes are 21. So out of my whole net worth, it's only about 15 or 20% of the money in this area. But it's a new area, something new to learn, some new way of doing things. And that can actually make a very big difference over the next 5 years to the portfolio or to your investment basket, because it's a completely new vertical, it's a completely new category. Friends, I've actually completed the message for today, but the idea is very simple. We move forward, we'll go even further, and there are some very interesting things to do. There are some very interesting pockets. The learnings, to my mind, or the summary of this thing is that there are sectors which will keep doing better than some other sectors. We need to identify that. And the other learning is that actually when you have something which is at an all-time high, it may not be such a bad thing. So the point is, we don't need to get worried. So over this weekend, you can really enjoy. You should really be partying. Oh, Indian markets have reached a new high, or Indian markets are going to a great high. Means it's a fabulous opportunity. And if somebody is interested in that video, please let me know. I'll share that video with you. I mean, you will see that you'll go insane in terms of how much wealth can be created in India over the next 5-10 years. This is like a fabulous time.